let's get on board Dikshit Mittal, who's the Senior Fund Manager of Equity LIC Mutual Funds, joining us now to weigh in on the market. Hi Dikshit, thank you so much. Good afternoon to you. Thank you for taking the time out for us. Dikshit,
Yeah, hi, good afternoon.
look at the way the market is recovering. In fact, we're pretty much back to the 2nd April levels before this entire tariff saga played out. Almost like this whole tariff news is already water under the bridge. Are you now seeing some bit of a valuation comfort after the correction, or the way markets are moving, we are back to the previous levels? What do you make of this market?
Yeah, so starting with valuations, after this around 15% price correction, and I think 6 to 9 months of time correction, now we are trading at below 19 times 1 year forward P multiple. And if we look at these valuation in context where bonds are trading, because currently we are below 6.5% bond yield. So that means bonds itself are trading at around 16 times P multiple. So relatively, I think equities are looking attractive, and especially in the light of kind of low double-digit growth, which we expect in the EPS over the next 2 to 3 years. And also, relatively, India's position in terms of fiscal deficit, corporate debt as a percentage of GDP, as well as household debt as a percentage of GDP, I think we are relatively very well placed. So, looking at all these things, I think the market look constructive over the next 1 to 2 years.
All right, when the markets look constructive for the next 1 to 2 years. Hi, Mr. Mittal. This is Shrishti also joining in. But Lord, what is looking good to you, and what have you added in the recent correction that we have seen for the Indian markets?
Yeah, so basically, what we think is BFSI as a space is looking attractive, especially if we look at the credit growth, which has been in the region of 11 to 12%. And also, most of the NIM compression, I think, seems to be behind. Maybe going into next year, maybe by second half, NIM compression, which we are witnessing for last 1 year, I think that will also be in the base. And at the same time, some of the pockets of credit stress that we saw, like MFI and some unsecured, I think that is also seen to be at the fag end. So to that extent, BFSI as a space looks relatively attractive. And then long-term theme of power capex, especially in the transmission and distribution, we are bullish on that theme. I think we have been building our positions in that segment. And then finally, consumer discretionary as a sector, I think can come back next year, especially looking at the kind of tax breaks that government has given, and also the normal monsoon, and also the incremental commentary from the companies has been encouraging in terms of pickup in the rural and urban consumption. So these three pockets, we are bullish, and we have been increasing our exposure into these segments.
Right, Dikshit, so you mentioned the discretionary consumption basket. I'm curious to know within that basket, where do you see value? Do you see it in the hotel industry, the airlines? Within that basket of discretionary consumption, where do you have your positions?
So basically, consumption as a basket is a quite big thing, but we are more focused on the opportunities where India has a low penetration as compared to global levels. So whether it is retail, or maybe some of the liquor stocks, or as you mentioned, airlines, or some of the pockets like which have long runway for growth. At the same time, we have been cautious on staples as a category, because staples we seem to be quite well penetrated, and growth rates are quite limited. But apart from that, wherever we have low penetration levels and volume growth is still in high single digit or low double digit, I think we have been positive on that segment.
All right, but Dikshit, believe that data center is another big theme that you have been liking of late, because yes, just before this whole tariff news kicked in, we were discussing about the long opportunity that lies ahead for India to expand in this sector. But Dikshit, help us understand that within the listed basket, there are very select players that have presence in this particular segment. Where are you eyeing, and where are the opportunities lying within this data center theme?
So data center, I think as a theme is quite big. I think which can grow 5x to 10x into the next 5 years. But we have very limited opportunities as of now. But we are focusing on companies who are providing equipments for data centers, for setting up equipments, as well as some of the EPC companies which have good track record historically to invest into these opportunities, and some of the beneficiaries of this sector theme. So our focus is primarily towards the enablers, like which companies which are enabling to set up these data center as of now. So gradually, as India matures, so incrementally new opportunities will also come in.
us understand that where are you looking at specifically, because at one point there are some MNCs which have presence in data center, but there are some domestic players as well which are looking, which are talking about the opportunities in the data center. So any sense on that? I know that we can't talk stocks, but in this bifurcation, where are you tilted towards?
So basically, the companies, there are two kind of companies. One is basically who are setting up the data centers. What we think is that this is a highly capital intensive segment, and incremental IRRs are still uncertain. But at the same time, there are companies who are providing data center equipments, like companies who are providing switch gears, companies who are providing power backup, or companies who are providing wires and cables for these data centers. So we are more bullish on the latter part of the sector.
Right. Dikshit, also talk to us about the couple of names that came out today. Came to light today on the back of the news that's coming in on tariff. That there could be some, while there could be some relief on the auto space, there could be there could be a rejig as far as tariffs are concerned, as far as semiconductor, electronics, the EMS, or the pharma space is concerned. Do you really think that these spaces are going to be the most affected? Because India is at an advantage as far as the EMS manufacturing or the pharma space is concerned. Given the tariff news now coming in, how do you look at these spaces?
Right. So basically, the whole this tariff thing has been quite complicated, and it has created a lot of uncertainty. So from investors' perspective, I think one can focus is basically companies who are ingrained in the global supply chains. Because even if some manufacturing shifts to US, so for the components, or basically the basic components, or maybe basic intermediates, they have to depend on some of the other countries or some of the other partners. And India as a country has slightly better relations with the US, that we have seen the kind of tariffs India has faced as compared to other countries. So to that extent, one should focus on companies who are providing these basically components or intermediates, and which are highly ingrained in the global supply chains, which have the global relations with the global MNCs. I think these kind of companies should do well going forward, though near term, we don't know what kind of tariff will be imposed sector-wise, what kind of tariffs will come in. But I think companies which have these qualities as well as some kind of advantage, whether it's cost advantage or technology advantage, I think in the long term, these companies should do well.
But Dikshit, talking of today, yes, there has been quite a good rally in the markets on the back of what's been the pause that has been announced, and it's sort of a relief rally actually. But Dikshit, when we look at 3 to 6 months down the line, there is uncertainty that is prevailing within the managements, within the investors as well, and along with that, the inflationary concerns from the US markets expected to trickle into the globe, of course, and the global slowdown is also at risk. But help us understand, Dikshit, how do you sense this situation in the medium term? Is it a time to be a little cautious? And if you can flag off some sectors where you believe that at this point in time, given the valuations, investors should be wary of?
Yeah, so basically, it's very difficult to take a 3 to 6 month view. But if you see last 3 years returns of various indices in the domestic market, that has been in line with the long-term trends, that is 12 to 15% returns, and that has been backed by the earnings growth. So to that extent, this tells us that there is no valuation froth in the Indian markets. So going forward, if the earning growth sustains in low double digits, I think market should do well. So obviously for investors, has to take minimum 2 to 3 year view from here. Maybe beyond 1 year also, that will be fine. But 3 to 6 months will be difficult. But looking at the kind of valuations that we're trading at, the kind of historical returns we have been generating. So I think we don't see any major in terms of froth across the market. So there may be some pockets, but on a market level, I think we are still reasonable. So if anyone is looking beyond 3 to 6 months, I think that is the right way to look at the market, because all these tariff wars and all these things, I think, should be gradually settled. Though 90 days period has been given, but one should keep some kind of buffer also. So assuming 3 to 6 months, these kind of things get settled down, I think from then market will start looking at FY26, FY27 kind of earnings. So to that extent, I think we should be reasonably okay overall.
All right, Dikshit, thank you so much for taking the time out and joining us today. We will let you go on that note.
If you like this video, then like, share and subscribe to ET Now.